You think you're disciplined because you have rules. You think you're disciplined because you wrote them down. You think you're disciplined because you can explain them perfectly. Then this happens. One normal loss. One stop out that feels unfair. One move that goes without you. And suddenly your discipline isn't a rule anymore. It's a feeling. And feelings change fast. A lot of retail traders don't fail because they never learned a setup. They fail because their mindset collapses in one specific moment. The moment the market makes it personal. In many broker risk warnings for CFDs in Europe, about 3/4 of retail accounts lose money. Source: ESMA mandated broker risk warnings displayed by CFD providers. That number isn't saying you're dumb. It's saying pressure breaks people in predictable ways. Because when you're calm, you're a planner. When you're triggered, you're a negotiator. And negotiation is where discipline dies. If you want trading psychology like this every week, subscribe and hit the bell. Because this channel is built for traders who want consistency, not hype. Watch till the end. Because I'll give you a simple reset you can use the next time you feel your discipline slipping mid-session. Here's what nobody tells beginners clearly. Discipline is not a personality trait. It's a behavior that survives stress. And most traders only test their discipline when they're already emotional, already tilted, already trying to make something back. That's like testing your brakes after you've started sliding. This is why you can feel like a professional on Monday and feel out of control on Tuesday, using the same strategy, the same market, the same screen. The strategy didn't change. You did. The hidden problem isn't that you don't know your rules. The hidden problem is that under pressure, you start bargaining with them. Quietly, instantly. And it feels logical in the moment. That habit is what kills accounts. Mental bargaining is when your brain offers you tiny exceptions that sound reasonable. Just this once. Just this one trade. Just this one adjustment. Just this one re-entry. Just this one bigger size. Just this one stop move. And the scary part is how convincing it feels. Because the market gives you evidence. Sometimes the re-entry works. Sometimes the bigger size hits. Sometimes moving the stop saves you. And your brain learns the wrong lesson. Not that you broke rules. It learns that breaking rules is a skill. That's the trap. This habit is subtle, but it controls trades automatically. It triggers when you overtrade, hesitate, or chase losses. It's the reflex to remove discomfort as fast as possible, even if the cost is your process. Have you ever taken a clean loss and immediately wanted another trade? Not because the setup was perfect, but because you needed to feel back in control. Have you ever watched price move without you and felt a rush in your chest, like you were being left behind? Like you had to do something right now? Have you ever felt strong after a win and then caught yourself thinking you can bend the rules because you're in the zone? Same mechanism, different mask. Here's a real scenario. You enter exactly according to plan. Same entry trigger, same stop, same target logic. Price dips, taps your stop, and then launches in your direction without you. It's not just a loss. It feels like a joke. It feels like the market singled you out. Your mind starts forming a story. I was right. That story is dangerous, because when you believe you were right, the loss becomes unacceptable. And now the goal shifts from executing well to proving something. So you re-enter, slightly earlier than you should, slightly bigger than you should, slightly less picky about confirmation. You tell yourself it's basically the same setup, but it's not the same. Your state is different. You are trading for relief, or you do the opposite. You hesitate. You see your setup, but your last loss made you flinch. So you wait for extra confirmation. Then you wait for more. Price moves. You miss it. Now you feel regret. Regret is a pressure, and pressure demands action. So you chase. You buy late. You sell late. You widen the stop because you don't want to be wrong again. You cut the trade early because you can't handle another reversal. And you call it bad luck. It wasn't luck. It was bargaining. Many retail traders repeat this mistake unknowingly, over and over. They keep hunting for the perfect indicator because the chart feels easier to fix than the mind. But the chart isn't the problem. The moment is the problem. The moment right after pain, right after ego, right after regret. Mark Douglas said, "The best traders have learned to be perfectly disciplined, perfectly focused, and most important, to create a mindset that allows them to trade without fear." Learned. That word matters. Because if it's learned, it can be trained. Now let's talk about why this matters so much, even if your strategy is solid. Because mental bargaining doesn't just cause one mistake. It creates a cascade. You chase one loss. Then you take a worse trade. Then you feel the need to fix it. Then you take another. Now you're not trading setups. You're trading emotions. And emotions don't have risk management. Look at the behaviors that show up when bargaining is active. Chasing losses immediately. Freezing in hesitation. Ignoring obvious risk signals. Moving stops to avoid being wrong. Taking profits too early because you're scared to lose the green. Adding to losers because you want your average price to look smarter. Re-entering instantly because you can't accept that you got stopped. All of these behaviors have different excuses, but the same engine, outcome attachment. Outcome attachment is when the trade stops being a probability and starts being a statement about you. Winning feels like proof. Losing feels like exposure. Missing feels like humiliation. And once it becomes personal, you don't protect capital anymore. You protect your identity. That's when discipline collapses. There's a reason this feels so intense. Research in prospect theory suggests losses tend to feel about twice as powerful as gains. Source: Daniel Kahneman and Amos Tversky. Prospect Theory, 1979. So after a loss, your brain doesn't just register a number. It registers a threat. It wants the threat gone. Fast. This is why a trader can be patient for hours, then blow up the day in minutes. Not because they forgot their rules. Because their nervous system took over. Think of your mind like a trading algorithm. A good algorithm has risk checks, position limits, cooldowns, max loss limits, rules that do not negotiate. But when mental bargaining activates, it's like your algorithm skips risk checks because it wants to feel better. That's why you can know the correct move and still do the wrong one. Knowledge is not control. State is control. And this is where the difference between retail traders and pros becomes obvious. Retail traders treat discipline like willpower. They try to force themselves to behave while under stress. They try to win a fight inside their head while the market is moving. Pros treat discipline like design. They remove decisions. They remove temptation. They build guardrails that function even when emotions are loud. Retail traders make rules, then argue with them in real time. Pros make rules, then follow them mechanically, because they already accepted that they cannot trust their emotions during pressure. Retail traders ask, how do I make it back today? Pros ask, how do I keep my edge intact? Retail traders add trades when they feel out of control. Pros reduce trades when they feel out of control. Retail traders want to feel confident before they act. Pros act in a way that creates confidence afterward. And here's the truth that changes everything. Discipline isn't being tough. Discipline is being boring. If this is hitting you, press like and comment which habit shows up most for you. Chasing losses, hesitation, moving stops, cutting winners early, or overtrading after a win. Put it in the comments, because naming it makes it easier to catch in real time. Most traders don't notice the bargaining while it's happening. They notice it later. They look at the day and say, I don't know what happened. What happened was a shift in state. They went from executing a plan to negotiating a feeling. So how do you recognize it early and fix it without turning trading into therapy? You don't need a personality makeover. You need micro-solutions. Small steps that interrupt autopilot. Simple, repeatable, realistic. First, track your emotions every trade. Not a long journal. A tag. Before you enter, label your state with one word. Calm, rushed, annoyed, afraid, greedy, bored, overconfident. During the trade, label it again. After the trade, label it again. This does something powerful. It turns a vague mood into data. And once it's data, you can work with it. Because you'll start seeing patterns that your memory hides. You'll see that you break rules when you feel rushed. You'll see you chase after you miss one move. You'll see that after a win, you size up and get sloppy. You'll see that after a loss, you hesitate and enter late. Awareness is the first lever. Here's a practical example. A beginner trader notices that most of their rule breaking happens right after they feel embarrassed. Not after a losing streak. After embarrassment. After being wrong in front of themselves. So they add one simple rule. If I feel embarrassed, I do not place a new trade for a few minutes. Not because they're weak, Because they're protecting their process from a known trigger. And suddenly their worst days shrink. Not because their entries improved, because their spirals stopped. Second, pause before executing trades. Not a meditation. A pause, a single breath, a single question. Am I reacting or am I following a plan? If you can't answer in one clean sentence, you are reacting. If you are reacting, you do not click. You wait. You step back. You let the candle close. You reduce size. You do nothing. Doing nothing is a decision, a professional decision. Here's how this looks in real time. You get stopped out. Your hand moves back to the mouse immediately. You feel the urge to re-enter. You pause and ask the question. The honest answer is reacting. So you impose one small delay. You wait for the next valid trigger. Not the almost trigger, not the hope trigger, the real trigger. That delay feels uncomfortable. That's the point. You are training your brain to tolerate discomfort without bargaining. Third, build pre-commitment rules that protect you from you. These are rules you decide when calm, not rules you invent mid-session. Rules like these. After any loss, I must wait for a full new setup, not a partial. After any win, I cannot increase size unless my written plan says so. If I break a rule, I stop and write what I felt before I trade again. If I feel the urge to make it back today, I reduce size immediately. You're not trying to be perfect. You're trying to be consistent. Now add an optional layer that makes this easier, especially if you like structured feedback. Use AI-assisted probabilistic thinking, not to predict price, to expose behavior. Your brain will always justify the one trade you remember. Data will show you the pattern you keep repeating. When you tag emotions and log trades, you can use a simple AI tracker to summarize your tendencies. When do I overtrade most? What emotion appears before my largest losses? Do I perform worse after a big win? Do I cut winners early after a loss? What time of day do I start bargaining? This turns your psychology into something you can actually manage, not with vibes, with evidence. Here's a believable example. A retail trader thinks their problem is entries. They keep changing indicators. Nothing sticks. Then they use an AI summary on their journal and see something clear. Their biggest drawdowns happen after they miss a trade, not after losses, after missed trades. So they create a process rule. If I miss a planned entry, I am not allowed to chase. I must wait for the next full setup or I am done for the session. That one rule can save months because it removes the most expensive emotion, regret. This is the core idea. Your edge is not just your strategy. Your edge is your ability to execute it when you are uncomfortable. Now go deeper, because the hidden habit has a belief underneath it. The belief is this: I should not feel discomfort. But trading is discomfort by design. Uncertainty is the product. If you require comfort to follow rules, you will only be disciplined when the market is easy. And the market does not pay you for easy. Brett Steenbarger said, "We don't trade markets, we trade our perceptions of markets." When you're triggered, your perception changes. Risk looks smaller. Opportunity looks bigger. Time feels faster. Rules feel optional. And your brain starts bargaining again. So the real mission is not to eliminate emotion. The mission is to stop emotion from changing your decisions. You do that with checkpoints. You stop thinking in terms of trades and start thinking in terms of checkpoints. Before the trade, you pass a checkpoint. Is this my setup? Is my size correct? Is my stop placed by plan? Am I calm enough to execute? During the trade, you pass another checkpoint. Am I managing this the same way I would on a neutral day? After the trade, you pass the final checkpoint. Did I follow process? Yes or no? When you judge yourself by checkpoints, you stop riding the emotional roller coaster. You stop letting one trade define your skill. You start building trust with yourself. Because self-trust is the real currency in trading. Without it, every click feels heavy. Every trade feels like pressure. Every day feels like a test. And that's why this problem is bigger than money. Mental bargaining erodes confidence. It turns trading into fear. It makes you second-guess everything. It makes you chase certainty in a world that doesn't offer it. So let's lock the whole thing into one clear picture. The invisible habit controlling your trades is mental bargaining fueled by outcome attachment. It builds unconscious risk. It triggers emotional reactions. It undermines consistent results. And you regain control with micro-actions, structured risk management, and AI-informed insight that reveals your patterns faster than memory ever will. Now the reset. The next time you feel discipline disappear, do this immediately. Lean back, one slow breath. Name what you want. Relief, control, revenge, certainty. Then ask this: what would a risk manager do in the next minute? A risk manager does boring things. A risk manager reduces size. A risk manager waits for a clean setup. A risk manager stops trading when state is unstable. A risk manager protects tomorrow. Do the boring thing for 1 minute. That minute is the difference between one loss and a destroyed session. This is the identity shift. You stop trying to be a winner. You become a risk manager. Winners chase outcomes. Risk managers execute processes. Winners need the market to validate them. Risk managers let statistics validate them over time. Winners feel pressure to be right. Risk managers feel responsibility to be consistent. And when you become a risk manager, discipline stops being a mood. It becomes a structure. You don't have to be among traders who keep repeating the same emotional loop. You can be the trader who catches it early. You can be the trader who pauses. You can be the trader who protects the account. You can be the trader who builds consistency one boring decision at a time. Subscribe if you haven't yet, hit like, and comment which habit you're focusing on first. If you're ready to evolve your trading mind, this is Mind for Trade, and this is your next step.